Good morning, everybody. This is the live market open for December 9th. It's Wednesday. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Thank you, everybody, for coming. As always, we'll cover the recent developments, focus on commodities, charts and levels, the next 24 hours, and of course, your questions. If you can't see the chat box under the screen, under the video, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. Okay, let's begin with what we had yesterday. Just after the show yesterday, we had industrial output from the United Kingdom. It was a bit mixed. We had upwards revisions, beats on some figures, misses on others. All in all, it was a bit positive for the British pound. Sterling went up just a bit, but then other events took over the markets. Okay. In Canada, we had data beating expectations, housing starts and also building permits coming out better than expected, but it was certainly not enough against oil. Okay, so we reached the main topic quite quickly. Oil is on our agenda, high on our agenda once again, and now it has a much wider impact on currencies. Okay, so first of all, let's look at oil prices. Today they're a bit recovering to $38, but yesterday we had them dip all the way to 36.78 if I'm not mistaken. You see we had quite a few dips. This was last week's range in WTI in crude oil, between 40 to 43. We had this fall mostly on Monday and yesterday, had this stabilizing around the August lows of 37.73, and yesterday, boom, we had another crash, only to be followed by some kind of recovery. But the atmosphere is not positive, or anyway, we're still sticking to lower ground. I'm good, Sinatra. Estoy bien. Thank you, everybody, for coming. And anyway, we're seeing some kind of stability now, but I think it's just the calm before the next storm. The main culprit is, of course, OPEC. Well, nobody expected them to cut production, but anyway, once they made their decision, a non-decision, then oil prices began tumbling down once again. And this had wide implications. Okay, so Canadian dollar yesterday reached new highs. It already made the break above 134.60 and left it well behind. Yesterday's high was 136.20. Okay, so over 150 pips above the previous resistance level. We're at the highest level for dollar CAD since 2004. Okay, 11 years. Now we're seeing some kind of correction, some kind of stabilization, 135.70, but it's still very high ground. Okay, it's still a $4 CAD, very low levels for the Canadian dollar. Only on oil, remember, well, not only, but mostly on oil. And that's, you can see the very close correlation between the price of oil and the Canadian dollar. But it has also implications for other commodity currencies. Yeah, let's talk about other events. First, US JOLTS sort of secondary jobs figure for October, a bit old. The Fed looks at it because it's important, but we already had the excellent NFP, or good enough NFP. The headline figure of job openings was a small miss, 5.4 million instead of 5.5, but the level of quits, number of people leaving their jobs and looking for new jobs, for a higher salary, for a new opportunity, ticked up from 2.7 to 2.8 million. So that's okay, sort of passed under the radar. Australian data overnight, home loans beat expectations just a bit, and Chinese inflation, which is still low, but at least not horrible. So that, anyway, that gave some support to the Australian dollar, but as we can show you, the Australian dollar is not doing so well, and that's because of falls in other commodity prices. Well, it's still battling the 72.20 line. It's beginning to be erased. 72.80 is still a very strong resistance line, followed by 73.60, 74. On the downside, we have 71.50, also as a clear separator of ranges. The battle over 72 continues. Good Australian and Chinese data against the fall in commodity prices. The last commodity currency is doing better because of milk prices, because it sells soft commodities. New Zealand, 66.40. at the moment, still within the range between 66 and 67. So it did feel some fall, but it didn't break any important levels. I mean, it made this rally all the way to 67.90 late last week, and then fell back to range, but it's holding on to the high range above the previous range of 65 to 66. I talked about oil, about commodities, about commodity currencies, but the impact goes beyond, okay? For instance, we have euro dollar climbing back up after making this dip under 108.30 early in the week. Okay, and Draghi's damage control, Draghi tried to explain that the moves were actually quite meaningful. And since then, it's grinding back up. Yesterday, it went back up. It's getting closer to resistance at 109.50. The post-Draghi high was 109.80, but that's just a prelude to 110. Okay, what's going on? Okay, I think we've touched on this topic in the past, but today it's already a much more important feature. It's called the safe haven currencies and risk aversion. Basically, when a currency is weak, when interest rates are low, when the country is printing money, it's usually the case in Japan, then people, investors, lend money in this currency and buy riskier ones, okay? So when you have good times, you lend in yens, and then you buy Australian dollars and New Zealand dollars, okay? Because that was the famous carry trade before the crisis, for instance. Now, when in times of trouble, money is repatriated back to the safe haven. It's basically clicking the Ctrl-Z, the undo button. Okay, so in times of trouble, money goes back into Japan. Talked about Japan, but now I'm just talking about the euro. Why? Because since the beginning of the year, the ECB has this QE program with printing 60 billion euros every month. Okay, so money is flooding out of the eurozone. And the interest rate is very low. Lending rate is 0.05, and the deposit rate has been lowered twice in 2014, and now it's already, just last week, Draghi lowered it again, minus 0.30. So banks are punished for keeping money with the ECB. So in good times, money goes out of the eurozone, and that's what the ECB wants, a weaker exchange rate, to riskier assets. Okay, now in times of trouble, money returns home. These are times of trouble. Why am I saying times of trouble? Because the slump in commodity prices is also a sign of a global slowdown, also a sign of deflation, which the ECB fights really hard to battle. So it's not really good news, just too much stuff in the world, not only oil, and not enough people to buy that. So that's why we're seeing the euro strengthen, okay? Now I mentioned the yen. Also, the yen is strengthening, still within the range. Still, the dollar yen has these long periods of frustrating range trading. This time it's a bit, the range is better defined and it's wider, 122.22, 123.60. But it's if yesterday was closer to the higher end of the range, now it's closer to the lower end of the range, 122.78. Again, there are a few levels within the range, but the bigger ones to watch are 122.20 and 123.60. Okay, so the yen is also a safe haven currency. What about the pound? The pound is sort of like the dollar, somewhere in the middle. So we've seen it fall very nicely just around here to this line of 149.50. Yeah, and climb back up once again above 150. A little bit choppy action. Good morning, everybody. And let's see what lies ahead. Yesterday, the data was mixed and didn't provide a clear direction. We have the Bank of England's rate decision tomorrow. Okay, so the pound is somewhere in the middle. Safe haven euro, safe haven yen, unsafe commodity currencies. Okay. Also, the Swiss franc, it used to be a risk currency before the crisis, but since the S&B intervened so much, it's not such a clear safe haven. You know, the Swiss banks, the safety, neutral country, never in war. Anyway, we've seen the franc strengthen also, but it's more in line with the moves in the euro this time. Okay, so it's 99.30 here. support at 99, resistance at parity, not so strong resistance anymore. Euro Swiss, very, very stable, 108.40. Okay. Euro pound, the strengthening of the safe haven euro is seen also against the British pound, and it's at the highest levels in a month. Okay. So here we are, 72.60, a bit more choppy than it used to be. 73 is the next line to watch. Sorry, 73.20. Yeah, and then yeah, 74 and 75. On the downside, we have the clear line for me, 71.60, because of this dip here and because of some work as resistance beforehand. Yeah, question from Sarab. Good morning, guy. Can we see euro pound? Yeah, that's what we're talking about right now. And you have a chart here on the from Tillen. Okay, let's talk just a bit more about euro pound. So the line 70 to 64 I mentioned here, it's not that strong anymore. I would move it here. This looks already much better, 70 to 50. Okay. And we're still battling this line, but all in all, we've seen the weakening of the pound because of ongoing dovish rhetoric and weak construction and manufacturing PMIs. Services PMI did help the British pound, still looking for a direction here. The biggest move upwards came because of Draghi. Now you have a chart regarding pound yen. Let's share it also on the screen. Very nice chart. Okay. So this is the chart shared by Tillen. Thank you very much. You have 240 minutes, that's 4 hours. Short-term chart, we're seeing the range widening, the megaphone pattern, if I'm not mistaken, right? Again, I focus on fundamental analysis, not on technical, but of course we touch here also on technical analysis. So we have a widening of this range, this megaphone pattern, and we're seeing it according to your lines. Where do you short-term, you're short or long? Anyway, with this risk aversion, of course, the yen is stronger than the pound, and that's why we're seeing it fall. And these two lines, you've so I think you're the tendency is to the downside. If we're to the downside according to your chart, then let's look at the lines I have also on my chart. 184, 183.90 still support despite this breach. Okay, and because it's only a small breach, but yeah, it's moving more to the downside. To the top side, we have 186 to 188.10. Further to the downside, let's look at your chart. According to the trend line you posted here, we have so further support. I guess it's getting closer to 183.50, right? Or at least for today, 183.60. Sorry. And the top side is quite wide, it's 186.60. But if I understand correctly from the moving averages you put up there, it looks I'm long, but would not bet too much on it. Yeah. Yeah, if this atmosphere continues, it's of course negative for the pair because it's a risk off. But if things improve, maybe next week when the Fed indeed hikes and speculation will be about the pound as well, who's next, then maybe we can see a better fate for the pound. So it's an interesting chart. Let's see if the range widens or not. Okay. Thanks for sharing anyway. If you have another specific question about this pair or anything else, please shoot it out in the chat. I have a question here about the S&P. S&P, where's that? Let's take a look at, yeah, 2068 with 2115 still working as, oh, let's look at the wider chart. yeah, it's still range trading, still looking for a direction. You can look here, you can see perhaps if you want to see higher lows, but I see it as just choppy trading. Market's looking for direction, waiting for the Fed, some kind of support here at 2040, resistance at 2140, and further support 1870, 1833. All in all, I think after a huge rally, a very long one, we're now looking for direction. Doesn't mean it'll tumble back down, but it's sort of looks like the momentum is a bit out. Okay, let's return to, we talked about, well, I think most currency pairs. Euro yen is also moving higher with this, well, mostly on Draghi. Further resistance here at 134.20, getting close to that level, and support at 133.15. Anyway, that's what's going on in markets. Risk off, better for the euro, better for the yen, Swiss franc, and bad for commodity currencies. And the pound and the dollar are somewhere in the middle. Okay, today we have a very light morning. We had the trade balance come out from Germany. It was, well, okay, nothing really special. Unemployment rate in Switzerland remained at very low at 3.4. Chinese inflation data I mentioned, not horrible, 1.5 year over year instead of 1.4 on consumer prices. And on producer prices, it's still very negative, minus 5.9. Okay. What do we have on the agenda today? Not much during the European session, just a few bond auctions, which are not so significant. At 3 GMT, we have wholesale inventories in the United States, also a second tier figure. Okay, and why don't I have here that New Zealand trade balance? Sorry, New Zealand rate decision. So let's look at the agenda for today. Wholesale, US wholesale sales at 3 GMT, not very important. Crude oil inventories becomes more important today because every oil-related decision, oil-related figure, oil-related news is of importance to all markets. Okay, we've seen an indirect effect also on the euro. Okay, the expectation this time is for inventories to fall. In general, the trend is to the upside, but maybe they'll fall today. That's the expectation. I doubt that. Well, we had the API figures which were negative, so this, if we have a follow-up in according to this chart, we have an expectation for a positive figure, 252,000 barrels, but after 1.1 million last week, sorry. All in all, there's just too much oil floating around. If we see another rise in inventories, that could serve as the next leg down for oil, which did manage to stabilize. So Canadian dollar remains in focus also today, but it also has a wider effect on other currencies. Okay, at 8 GMT, we have rate decision in New Zealand. Let's do a short preview for that as well, and then I'll talk about pound CAD, which I see you've asked about. So Reserve Bank of New Zealand makes its decision at 8 GMT. It's followed by press conference by the governor. I think it begins 5 minutes later, and then also later in the night we have a speech from the governor. Where is that? No, I don't see it here. Anyway, rate decision in New Zealand. Okay, I don't know how many of you are trading the kiwi, but it's an interesting currency. On one hand, a commodity currency. On the other hand, they're exporting milk. They want a lower exchange rate. They've intervened in the markets. Expectations are for cut from 275 to 250. 250 was the lower bound that they reached last year. And then they began raising rates from 250 to all the way to 350, and then gradually lowered it this year. And they're expected to lower it back to the baseline of last year, 2.5. Okay, so that's almost certain. That will not be a surprise. If they don't cut the rates, that'll be a surprise. That means the kiwi will shoot higher. Assuming they do cut the rates, as everybody expects, as they hinted, the focus is what's next. Two things to watch. First of all, are rates at the lower bound. Okay, have we reached the end? And that's relatively positive for the kiwi, or not, or it can fall further, and that's negative for the kiwi. So that's one thing to watch. The second thing is what they say about the exchange rate. If they're happy with the current levels, which are off the lows, but still in the wider picture relatively low, if they're happy with these levels, it's positive for the kiwi. If they're unhappy and they talk about intervention or worries or unjustified and things like that, like they said in the past, that's negative for the kiwi. Okay, so this is a thing to watch. Let's look also at the chart of kiwi dollar. And then I'll talk about pound CAD, which you asked about. So once again, the level 66.40 at the moment, 66 to the downside, 67 to the upside, and 65.50, 65 more to the downside, 64.50 if we have really bearish decision, and above 67, 67.90, and 69. Okay. Now let's look at. Okay, pound CAD is on the move. This is very, very related to the crash in oil prices, to the crash of the Canadian dollar. Made its choppy direction above here, above resistance at 203. Next resistance is quite clear to see, I think. Let's maybe round it a bit. No, I can leave it. I would say it's 205.70. That's the next resistance line. It was here, the top level in September. If we have another crash in oil prices with a relatively stable British pound, support, well, I can move it. It's a bit more choppy here, so I would say 205, sorry, 203.50, 203, somewhere in that range we have some kind of support. This cross has become much more choppy, very choppy levels here. Okay, so it's not that clear, not that easy to trade. Further support, I would say the round 2 level and then 199. Let's widen it a bit. Yeah, so we have this 205.70 maybe. And then, of course, high resistance right here, 209.60. Okay, so these are levels to watch. Another crash in oil prices. The pair goes up. Some stability. And we can perhaps see it dip a bit lower. Okay. Any more questions? Let's see what other events we have today in the markets. Of course, at night and the other side of the day, well, as far as I know, we have a speech from RBNZ Governor Graham Wheeler 4 hours after the rate decision. But anyway, he will meet the press immediately after the rate decision. So it's focused on the kiwi. At midnight GMT, we have a big event from Australia. Okay, the jobs report. Last time it was really, really great. It showed the rise. Okay, had really healthy figures. The unemployment rate dropped to 5.9. Now it's expected to rise to 6% in Australia. Participation rate, which is of course related, is expected to remain stable at 65. If we compare this to the United States, where we have 62.5, it's of course positive. And of course, the most volatile and most important figure is the employment change, or if you wish, like the NFP in the United States. Last time it jumped 58.6 thousand. Some people said it's too good to be true. Anyway, we'll see that now because we're expecting a correction. We're expecting a drop of 10,000 jobs in Australia for the month of November. Anyway, the whole report. It's also important to look at part-time and full-time. Last time it was 18,000, 18.6 part-time and 40,000 full-time. Okay, so last time it was mostly full-time jobs, which was also, of course, very, very positive for the Aussie. Gave this turned the Aussie into a very resilient currency in the past month or so. It's not the only reason. Even now, when we're seeing this commodity slump, the Australian dollar is doing relatively well. Okay, so of course there are weak figures also in Australia, like capital expenditure, but the RBA is relatively pleased, and one of the main reasons is, of course, the unemployment, the employment situation in Australia, which remains quite positive. Okay, so that's a big event for the night. We'll talk about that tomorrow. Small, relatively second-tier figure we have at 7:45 GMT tomorrow. Before the show, we have inflation data from France and other figures such as industrial production and things like that. And tomorrow morning during the show, at 8:30 GMT, we have a rate decision from Switzerland, the second rate decision. In general, we have now, beginning this evening, we have 3 rate decisions in less than 24 hours. Okay, then we have the UK tomorrow. We'll talk about the UK more tomorrow, but let's do a preview for what we'll have tomorrow during the show. The Swiss rate decision. Now, I'm not, as I always say, I'm not a big fan of the Swiss franc, too much intervention, but this intervention may undergo some kind of changes, okay? So I think the central bank in Switzerland, the Swiss National Bank, did intervene around the ECB decision. They did sort of weaken the franc before the move in anticipation of a big move from Draghi. And when Draghi didn't deliver the full package, I think they bought a lot of euros and sort of jumped on the bandwagon, exacerbated the move and made it stronger, pushed the euro even higher. Of course, also stop loss points were triggered and things like that. Anyway, that was what happened so far. Now, the big question, they have an interest rate of 0.75, negative, minus 0.75. Okay, that's the, and there is some speculation that they lower it even further to minus 1%, minus 100 basis points. Okay, another 1/4% lower into negative ground. Why? Because the ECB also lowered its deposit rate from minus 0.20 to minus 0.30. All right. On the other hand, because the ECB didn't do as much as expected, perhaps they will not move. So that's an open speculation. Of course, if they cut rates, it's bad for the Swiss franc, and if they don't, it's positive. Another thing to watch, more importantly, is perhaps, well, at least the same level of importance, is their policy about foreign exchange intervention. They're probably expected to keep it, to pledge to weaken the franc, to intervene as much as needed. In January, the beginning of the year, on January 15th, they removed the peg of 120, but they did also lower the interest rates to the current levels of minus 0.75, and also cut the sort of pledge to intervene without any specific levels, but they're active in the markets. We know that. Okay, so let's see if they what they do tomorrow. It's at 8:30 GMT. I think we could have nice movements, not only in dollar Swiss, not only in euro Swiss, but also in euro dollar because of this Swiss rate decision. We'll cover it live, try to understand everything that will go on during the show tomorrow. Okay. Any questions? It's sort of review what we had and what we'll have this week in general. Yesterday we had, during the night, Japanese GDP. It canceled the Japanese recession. It showed that Japan actually is not in recession, and that's good news. Less incentive for the Bank of Japan to act. In general, the Bank of Japan also has its own inflation measures, and these show that the situation is not that bad. Okay, so it's that's good news from Japan. We had Chinese trade balance. It was not very convincing, a bit weak. It weighed a bit on the Australian dollar, but Australian dollar is feeling the heat more from commodity prices. US JOLTS came out better, worse than expected in the headline, but better than expected in the quotes. Wasn't that meaningful. Today we have the rate decision in New Zealand with a rate cut expected tomorrow. During the night, Australian jobs report, Swiss rate decision, which we talked about, and the rate decision in the UK together with the meeting minutes. Okay. And on Friday, we have a focus on the US consumer, retail sales, and consumer confidence. All right, a question here about Aussie against the yen. Let's see what's going on there. Well, safe haven flows are in play. Stronger Japanese yen, weaker Australian dollar. This is exactly the undoing of the carry trade, the risk off. Weaker commodity currencies, Aussie CAD and Kiwi. Stronger safe haven currencies. Quite a lot of noise here. And we're seeing 88.55 at the moment. Support is quite clear, I think, here at the double bottom at 88, 88.06 if you wish. Okay, and we've seen it as a double bottom twice. So that's a line of importance. Oh, and it also was a double top, so it's a very, very clear separator of ranges at the round 88 number. Okay, it's a very nice pair in technical terms. And resistance here just above 89, 89.10, I would say, because there was resistance here before this move to the upside. And let's look at further lines. I guess I would put one here at 86.50. And to the top side, well, this is a bit more choppy right here, 90.45 towards 91. Well, I know we've seen a reversal of the moves to the top side because of this commodity slump, because of the risk-off atmosphere. But the trend in general remains more to the upside than to the downside, right? Because Japanese yen is relatively stable or weakening against the dollar in general, and Australian dollar has shown some strength of late. Okay, so if this answers your question, any more? Let's show you. We had a breakout here, and this is the CME group's FedWatch figure. The implied probabilities, according to bond markets, for a rate hike, they now stand on 83.3, 5/6 if you wish, higher from the previous day. That's figures for yesterday, and it was higher than 79% on Monday. That's for a rate hike to 50 basis points, which is not expected. Markets are expecting a hike to 37 basis points, which means change of the range from 0 to 0.25 to 0.25 to 0.50. Of course, the Fed can also decide to stop using a range and to make it exactly 0.25 or exactly 0.50. But I think, well, first of all, to make a real hike, they would need to raise it above 0.25, and 0.50 might be too much because they're talking about gradual, so they might just change the range. Okay, the effective interest rate in the United States is flirting, is sort of 0.12, 0.13, so exactly in the middle of the range. Okay. Question from Fabian: can you suggest to us a link with some good resources, articles, websites to learn more about the CHF and Swiss bank actual policy intervention in order to understand what's going to happen tomorrow? Let me try to look. There is this guy, George. Dorgan, who really focuses only on the Swiss National Bank. And here you go. His name, his name is George Dorgan, and he talks a lot about here we go, snbchf.com. Okay, I just put the link on the chat, and or you can also follow him on Twitter. He really specializes in this, but if you want more about Swiss franc intervention, I can also, if you want to just look back, what happened in January, I can give you a link. What I wrote about the SN bomb. Just sort of, well, a walk down memory lane, just put it now in the chat, what happened in January. But if you want to follow more recent news, again, I don't follow this too much. So George Dorgan is the one to watch. Jax asks what pairs to watch today. Well, commodity currencies are in focus. All three, really all three, because we have oil inventories in New Zealand, and rate decision in New Zealand, and the Australian jobs report. I would say that oil is still the main focus of markets, at least during the European session and early US session. Then the focus moves to New Zealand and Australia because this is still an ongoing story. Yesterday we had a big drama. Let's see if it calms down, and tomorrow this drama will already belong to the past, and that's also a possibility. Or if it will continue, I suspect it will continue just a bit more. So that's what's going on over there. Okay, any more questions, or we'll get to the wrap up for today? Okay. This is the wrap up for the live market open on December 9th. It's Wednesday. The theme in the markets is risk off. The crash in oil prices, other commodities, is causing a risk off atmosphere. And that means lower commodity currencies, Aussie, Kiwi, and CAD, higher safe havens, Euro, Yen, and Swiss franc in some way. The US dollar and the pound are somewhere in the middle. So euro dollar is climbing a bit higher. No recent news from the Eurozone, not Draghi, not indicators, and all of them were second tier figures, but the pair is grinding its way back up. 109.50, 110 resistance, 108.30 still support, followed by 107.60. Pound somewhere in the middle. Yesterday we had mixed figures from the industrial output, manufacturing production. So we had choppiness. We had the pair fall to support, almost support 149.50, and then rise back up. Still battling 150, 160 high resistance, 149.50 support. Dollar yen is a safe haven. The yen is strengthening, but still well within the range of 122 to 123.60. So the focus, well, bad atmosphere, stronger yen, good atmosphere, weaker yen. Canadian dollar, of course, yesterday had a huge move. Dollar CAD went all the way up to 136.20, a new 11-year high, highest since 2004. And we've seen some stabilization of the pair under 136, but not, I would say, it's just kind of a dead cat bounce for the Canadian dollar, and the Canadian dollar still remains weak. So 136.20 is the level to watch, and 134.60 is now support. Aussie dollar got carried away with other commodities, despite okay figures from China and from Australia. 72.20 is not really that important anymore. 71.50 on the downside and 72.80 on the downside are levels to watch. Tonight we have the Australian jobs report, and last time it was excellent, so this time expectations are a bit lower. Kiwi dollar, relatively resilient in comparison to other commodities, but still sliding. 66 to 67 is the range. 67.90 is resistance, and support 65.50, 65. Today we have a rate decision in New Zealand. They're expected to cut the rates from 2.75 to 2.50. If they don't cut the rates, the Kiwi leaps. Assuming they cut the rates, watch two things. What they say about further rate cuts, if it's finished for now or not. And of course, what they say about the exchange rate, if they like it or not. So these are two figures, two key elements of the statement to watch. Dollar Swiss here, 99.20, ahead of the Swiss rate decision tomorrow. 99 is support. Resistance is somewhere above parity. And let's see if the Swiss National Bank tomorrow morning will intervene more. And if they cut interest rates even deeper into negative territory from minus 0.75 to minus 1%, we'll cover it. We'll provide a full coverage of that during the show tomorrow. Okay, let's see if we didn't miss anything in the wrap-up of importance. Regarding Canada, the Bank of Canada opens the door to negative rates. They say that at the moment they don't intend to cut rates at all and everything looks okay, but in the future the lower bound is not 0, the lower bound is minus 0.50, and that could be of importance in 2016. Yeah, and so we talked, I guess, about everything. That's it for the wrap-up for today. We have a comment here. BTC safe haven, also China buying, moving yuan out. Bitcoin, yeah, because it doesn't depend on one single government. That's the theory, but there's also lots of speculation. Bitcoin is maturing, but it's still young. Perhaps we'll cover that more in depth in another show, in another episode. Let's see if yeah. Okay, so I guess that's it for today. I wish everybody safe trading, not only safe haven currencies, and let's see if we have some kind of optimism return to markets or more of this doom and gloom. And we'll be here tomorrow as usual. So thanks everybody for coming, and see you tomorrow, and bye-bye.